welcome to the Closing Beat, everybody. Happy Wednesday. How you doing out there? Hope everybody is doing well. We are financial advisors here at Jazz Wealth, and as of today, we are officially ranked one of the best financial advisors in all of the USA. So, applause. Yay. Do we have that? The USA Today is officially, unbiasedly, they did it. They reached out to us and said you've been ranked one of the best by you guys, as well as our growth and everything. So somewhere on the USA Today's website, you can actually see that, along with a lot of other great advisors as well. We're happy to be a part of that list and be one of the best advisors in the USA for 2023. Nobody asked us. They just took a look at what you guys said and apparently made the list. So thank you for that. What do we have here? We have a stock market that's woken up, right? It's all of a sudden more interesting. It's more exciting. So we have earnings on one hand. That's pretty good. We have banks on the other hand. Ooh, not so good. But really just a couple things going on there. Otherwise, this is kind of a healthy pullback so far. It's a pretty optimistic pullback. It's not a doom and gloom pullback like, COVID or something. But we're going to talk about that here today. Hopefully we can help you with something that maybe you didn't know. Something you may not have known is how the FedNow system works, as well as the central bank digital currency, or what we're probably just going to call the Fed dollar, or the US dollar, the digital dollar. I don't know. There's not a name for it yet. We went over that last week in our Wine and Wealth class, the details, the legislation and everything, so you can understand how a digital dollar may be whatever it does for you. I tried to just kind of go over the data. Also, if you want to play a game, jazzwealth.com/guess the Dow. You can take your shot. Where do you think the Dow is going to close at the end of next week? If you're correct, or closest without going over, you will win a $100 gift card, and happy to send that out to you. Or you can credit your account like a few of our clients have decided to do. If we take a look at the S&P 500 here, remember that the volatility is already priced in. Whether you like it or not, people were already betting that as we get into May and as we go through June, the stock market will in fact be volatile. I shared this with you guys yesterday. Volatility by month. You could see that in May, taken off. In June, of course, that's already expected. June was expected to have that volatility. So those are trending higher. But July and August sees everything calming down a little bit. So what does that mean? If you go back over here, you notice how we've had these really quiet days. All of that gobbledygook on the chart over there was telling you that's not going to happen through May and June. There's going to be more of what we saw yesterday and today, more action and things like that. That's one thing to keep in mind. The second is that the stock market is usually quiet the day after a strong move. In fact, you could use our research site to check that out. The average gain the next day is a negative 0.18%. Median was like negative 0.19%. Where did the stock market close down today? Just a little bit, 0.3%, 0.38, something like that. So very much normal after a loss of more than 1% in one day. You can actually look at this on our site. After a loss of more than 1% in one day, the next day tends to do a whole lot of nothing. It can have a wild range, but tends to close pretty much even on the day, which is exactly what we saw today. The other thing to focus on is, you notice how the market does this. And if you pay attention, this may drive you crazy, but if you look in every now and then, you probably wouldn't notice this. But the market lulls you into periods of nothing. In fact, as you would find on our research site, every 10 days, the market loses more than 1% on average, right? Over the course of 30 years, 10% of all days are down by more than 1%. That's not a lot of days, right? So essentially 3 out of 30 years, you would see those types of days. If we were to do it that way. So what happens is 90% of the time you're like, okay, market's just being the market. Everything's cool. I'm fine with that. Then bam, down more than 1% day. Makes you feel like we've collapsed, cratered, fell apart, crashed, right? I got all these emails today from people like, what do you think of yesterday's crash? And I'm like, oh, child, that's 1%. Like, that's going to happen. So if we know that, we got to think of the other side of it as well. 90% of the time, we're going to feel good. Statistically, 90% of the time, we're going to feel like everything's fine. But that 10% of the time, you get punched in the face and you go, well, what happened? What did I do wrong? It's not that you did anything wrong. It's just the way the market actually behaves, and now you know that. Now, as far as the stock market goes for today, probably no surprise sector-wise, that the tech sector was your best performing area there. And if you follow earnings, then you look at it and he's like, well, okay, great. Microsoft, great earnings. You had NVIDIA higher on the day, Amazon higher, Micron Technologies, even Meta was higher, at least during the open there, during the market session there. And Alphabet, I don't think I mentioned Alphabet. So these are all earnings-driven type stocks. Actually, Alphabet finished a little bit lower on the day. And that's your best performing sector. Tech-related stocks. Well, why would they do so well? Why would they have a good day? That seems really odd. If the market or economy is going into a recession, wouldn't tech stocks have a little bit hard of a run, right? Yeah, maybe. That could be the case. But one of the focus areas for investors in the tech stocks right now is, well, we know what interest rates are going to be. The Fed, they pretty much told us, give us one more quarter point. We'll do that next week. We'll raise rates, and then we'll probably stop. In fact, next week, they may start mentioning this is probably good here. We're probably confident in our attack on inflation, and maybe that's good, you know. So when you have that kind of knowledge, tech stocks, now they need money to grow, right? If money costs more, they can't grow as much because they can't get as much money. Well, now if we know what the cost of money is, now they can adjust. How did they adjust? Well, they fired a bunch of people. So tech, that's exactly what happened, by the way, whether you believe it or not. So tech companies go, we're going to fire 8,000 people. Well, we don't need them. It's not because they're lazy. It's because they need to go borrow. They need money. It costs them more. And so to offset that difference and have Wall Street not get mad at them and investors flee the stock, well, we have to get rid of some people. Lower our costs over here because our cost to borrow just went up. Business itself, or public companies themselves, you know, they can be pretty simple. Like we talked about FRC yesterday. It could be pretty simple to figure out until you watch someone that wants to impress you with their big words and stuff. Then you're like, whoa, I give him all my money. I don't know what he's doing. So that's not the case for the most part. You can figure these things out. We're all bright people. So the S&P, naturally pulling back. We're okay with that. Remember, we talked about this yesterday. This is your range. Nothing exciting happens till we get out of that range because you can't convince people to become overly bearish until we're down here. And you can't convince people to be overly optimistic or bullish until we get above that range. And that's the comments I will stick with. Naturally, the NASDAQ was positive on the day. And, well, that's okay because they had a couple good performers out there. The biggest stocks that represent the most weight in that index, they just had a really good day. That's okay. The Dow down just here a little bit. That continues to pull back. We know what we stand to look for there. Yesterday's class kind of reviewed that. The Russell 2000 being the weakest, and that's those small banks. There's a little bit of chaos going on over there. FRC's just leading the headlines, but they're all kind of not doing well in the short term. Exactly what analysts had predicted for smaller banks to run into a little rough patch during earnings season. They got it right. Very cool. Bonds, by the way, I got to point out, interestingly, bonds, yields, I should say, moved a little bit higher there. Why would that be? The market's pulling back. There's fear about the banks, right? If there's a lot of fear about the banks and the financial system and all that, then why would interest rates start moving higher? That's a little bit odd right there. That kind of shows on an intraday or just one-day basis that the soft landing crowd, people that believe that this is going to be just fine, mild to no recession will be just fine, they're winning. Their money is winning. They're putting their money where they believe the economy's going. And so they're winning at the moment. The people that believe doom and gloom, hard landing, great reset, recession, all that stuff, well, they're losing the battle. They could ultimately be right, but for the moment, they're losing that battle. And I thought that was kind of interesting to see in the bond market today. Yeah, there's a lot to cover. Let's just keep going. Here we go. You might notice some names. Snowflake. Oh, it's a pretty interesting day there. Datadog. Wow. So kind of a clever reversal by their part there. Okay, that's interesting. MongoDB. Wow, that's breaking out. That's kind of interesting. Why those stocks? That's all Microsoft. So when analysts looked at Microsoft's earnings, in particular their cloud business, the Azure, I don't know if they say Azure or Azure, whatever, the benefactors of such strong performance on their part, especially in that generative AI department, are these guys, right? So these three stocks got a lot of honorable mentions today in a lot of the analyst upgrades and downgrades, mostly upgrades for today. In particular, Goldman Sachs says, we are incrementally confident that the Azure growth can reaccelerate and continue to see upside for cloud consumption stocks, most notably Snowflake, MongoDB, and Datadog. All right, so that was one quote. They all said the same thing. It just does pretty much what you got there. Okay, let's go over to some stocks in the news here because there's a lot. We got earnings season picking up. Remember, 170 S&P names reporting, so we're going to not go through all of them. I got to do other things. Microsoft, first up on the list because you probably already saw it. 31% growth in their cloud business. And a lot of it driven by AI, and so whatever it takes, they don't care. They're just killing it there. Office 365, greater than 10% growth. Yeah, we're still using that stuff. You know, there's free ones from Google, but no, we're using these. LinkedIn, greater than 10% growth. They did really well. There was not really a lot to pick on there. I won't bore you with all the details there, but very, very good. Alphabet, not as good as Microsoft, but one of the interesting things there, remember, tech stock. They need to get money. Now, Google, they got cash. They can issue shares, whatever they want. But their total costs were 22% lower. What was I just saying again a second ago? We're firing people to bring our costs down because the cost to operate going forward is going to be a little bit more pricey. Well, they just proved that they did that. How do you think they lowered their cost by 22% in a quarter? Alphabet, of all companies, how were they able to do it that fast? Pink slips, baby. I mean, that's pretty much how it goes. You cut that kind of head count, that'll do it. Visa, you can still see everything? Yeah. So Visa, remember, this used to be a tech stock. So Visa is now a financial company, which is where it makes sense, but it used to be considered a tech stock in the tech sector. Now it's in the financial sector. Earnings beat by 5%. And I like looking at these guys because why? Why did they beat on earnings? Are we swiping our cards more? Yeah. Payment volumes up over 10%. Payment volumes, how do they make their money? Visa, it's everywhere you want to be. Visa, oh, thanks, that's new golf clubs. Over here, vacation, oh, that's pretty cool. We're swiping our cards a lot more. The transactional volume, money going to them through their intermediaries, off to the ending vendor, whoever you bought from, up over 10%. Not much more to say there. That's pretty much good news for them. You could ask yourself, is it overvalued? That might be a question. Enphase, big down day for Enphase here. In the short term, of course, that's weak. In the long term, these guys are the beneficiaries of the government spending a lot of money. Not just the U.S. government, by the way. So they beat earnings by 11%, gross margins better by 3%. Battery shipments were the trouble in the short term. Don't fear this sort of excitement that in the media has today. They even said themselves, don't worry, adding manufacturing capacity in the U.S., which is a little behind, due to the global demand for our products, as well as the incentives related to the Inflation Reduction Act, and I might add, the net energy metering 3.0 now out of California, that they're paying them. They're going to get the money from them. It doesn't matter if you buy Enphase's products. They're going to go ahead and get it from the U.S. government and from the state of California. The state of California, if you're out there, you know what this is. We'll call it the NEM because they call it that for short, net energy metering. They said this is directly from the Public Utilities Commission in California. They said an independent third-party evaluation of net energy metering 2.0, which is what was in place, found that the cost substantially exceeded its benefits. As such, we bring forward NEM 3.0. So we're going to go even harder at it. We're going to throw even more money at it. Whatever you feel, I don't know how this works out in California. The goal is just to create an incentive for people to add storage to their solar system, their solar panels, right? Add some storage packets there. Enphase would be like the #1 beneficiary of that. Whatever you feel about that is one thing. But the part that affects Enphase is they're getting that money. So you, the California taxpayer, they're getting that money. And this is what you see on TV where they say, oh, this is not fair or whatever. People are arguing back and forth. The proposal here creates a grid participation charge based on the size of one solar system to ensure that people who are not paying into the electric grid or people that are paying into the electric grid get the same benefit as people that have solar power and are not paying into the electric grid. Pretty tough if you live out there. But all of that to say, add that on, not a small chunk of change over the next 10 years. Add that to the Inflation Reduction Act. I did a class for clients to describe exactly how many pennies are going to go to end phase. You got a recipe for a long-term discounted stock that may be, kind of attractive to you. And I'm doing more of a deep dive there so you don't think I'm just reading off headlines, because there's a lot going on there. They are shifting to this, and it's, they're not counting on me and you to go out and buy this stuff. They're counting on whole states to be forced to do this, or just pay the utility company. Well, I don't want to pay them. I had solar power. Why should I have to pay them? Well, it's not fair because the other people still have to pay. So they're forcing you to go out and buy storage. We know when the sun goes down. Otherwise, we've got Chipotle. These guys, man. There's nothing wrong with Chipotle, right? It's good food, but restaurant margins was all the attention today. 25% margins for a restaurant. If anybody worked at a restaurant, you ever ran a restaurant, you have 25% margins on food, maybe alcohol, but on food, come on, man. They were at 20%. They went in one quarter from 20 to 25%. There's only one other time in the company's history that it did that, and everybody goes, well, when was that? What did the stock do then? And then went back and said, oh, crap, we better buy the stock. That's exactly what happened today. Margins, well done, like good stuff there. What do we have here? Our Wine and Wealth, I already mentioned, if you want to check that out. Our Jazz After Dark, we've covered some good topics here this week. RMD strategies for when the market is down. We talked about volatility last night, or tonight actually, and we're going to continue going forward. I like doing those for you guys. I get bored at night, and I'm like, I don't know what to do. I make a video. What's on my mind? So we'll continue doing that. Appreciate all the support, by the way. I'll answer your questions if you have any questions. Otherwise, we're going to get out of the way. I was a little bit quick today, but sometimes I get excited and I talk fast. These things happen. Okay, let's see what we got here. Roth IRAs, oh, you're answering somebody's questions. If you buy storage, why do I need the power company? Uh-oh, I got you fired up now. Gap and Go burrito stock, yes. Chipotle. You can, some people love them. Kevin over there, he doesn't like them. He doesn't like Chipotle. I don't know what's wrong with them. Spousal Roth IRA, is this a separate account from her already established IRA, or do you need to open an additional spousal IRA? No, there's no such thing as an individual IRA that you would call spousal. You know what I mean? So you have a Roth IRA, it's in your name. Your spouse has a Roth and it's in her name or their name, whatever. I don't know if you're a boy or girl, or does it matter anymore? So they're individual to the human being. You can link them together and all that stuff, but they're individual to the human. The IRS is very clear on that the I in IRA stands for individual. Nobody else may participate in that account besides you. Although it can be shared throughout your marriage and stuff. Solar tries tough to upsell, no cost to you, but you're swapping electric bill. Yeah, I'm not well versed in the actual implementation of it. I should be, because that's pretty popular down here in Florida. That I should probably know more about that. Anytime I've looked into it, I can't find where it makes sense to do at the rates that we pay for energy down here. Just doesn't make sense for me at the moment in our little sunny Florida town. So I wish I knew more for you, but Eloy says Meta, close to 9% of your portfolio. Okay. Already cut a little by 185. You trim a little bit more exposure. Riders the momentum a little bit more. And unfortunately, in the short term here, Meta has been a bit of an underperformer. You're going to find that when you wake up tomorrow, so their earnings came out. I have not looked at them yet, but you're going to find that it opens up higher tomorrow because I just saw that alert go off. Meta is somewhere around 230-ish, 234. Hey, that's good news, right? That'll be way up there. So yeah, if you're saying 9% makes me a little uncomfortable and I want to trim it to 7 or something, what a better day to do it, probably tomorrow or even after hours right now if you're looking at it. If that 9%'s bugging you. Yeah. The idea that the power grid going down also stops people on a solar panel from using power, and a panel still paying 10% connection fee. Here is where I'm at. Yeah, again, that side of things, I don't know what's right and wrong. You know, I would have to spend more time on that. But, you know, who's it going to benefit? That's what I care about. Like, what stock ultimately is going to get the fair or unfair advantage here? It doesn't matter to me what's right or wrong when it comes to a stock going up or down. I've got to perform. I saw that Disney suing the governor directly of Florida. It's been a little argument down here, just a little bit. Yeah. When will the Fed money start going to end phase? Well, they have to finish they have one production facility that is supposedly going to open any day now. I don't know the latest on that, but they have to actually be producing. So that's probably why people are a bit frustrated, because they're a little bit behind schedule there. They don't get it until they start producing. Yeah. Giovanni, of course you did. You sold out your Meta. And you bought some Enphase, or you want to buy some Enphase, of course. I know you like I know you like a discounted stock, man. You ain't fooling anybody. All right. I will, I'll wrap it up there. I've covered everything for you today. We'll be back to do this all over again. You guys enjoy. Thank you for watching and hanging with us a little bit, putting up with me and all that good stuff. More to come. Thank you. Hope you learned something, too. The whole point of today is to get you to learn something. Think about it. Jazz Wealth, we treat you like family. That was going to be our slogan, but the employees here took it a little too seriously.
You bought what? That wasn't in the plan that I built for you.
Oh, quit crying.
Don't spend one more dollar.
I'm gonna start calling you Sylvester because you sound like a real...
Tú siempre estás llorando como un bebé, llorancito.
I'm not mad. I'm just disappointed. That's how you get your identity stolen.
We decided to go with let our family be your family's advisor.